Thank you for joining us on Minds of Commercial Real Estate. We have Lee Kleinman from BFC again on the show. Lee, thank you for joining us again.
Good afternoon, Kamyar. My pleasure. Thanks for having me.
Thank you for joining us on this rainy day. No, it's not that easy to come, over. Today was one of the wildest thunderstorms at the beginning of the year.
It's a great day for an indoor activity such as this.
All right, amazing.
You got what I want, got what I want. You give me just one look and you know I'm good to go. You know I'm good to go.
So let's get right to it. You're one of the best CDC lenders out there that I enjoy working at all times. You always take care of the clients, give them, all the details, hold their hands throughout the whole process. And, that's one of the reasons they always come back to us, the customer service. I appreciate you.
Thank you. It's a pleasure.
What are you seeing in today's demands, borrowers' demands in terms for SBA financing and everything going on with the economy?
Sure. There's been a lot of fluctuations in activity, transaction types during the past few years with interest rates, the economy, this and that. But I've noticed throughout the years that the SBA program is typically in very high demand through ups and downs. Business owners need space. Very few businesses operate out of their house. So putting that aside, an operating company or small business concern needs space, and they either have to rent or own. And more often than not, many small business owners choose to own for many reasons. Mm-hmm. And so for that reason, the SBA lending demand is typically very strong.
All right. Great. Can you walk us again through how an SBA, 504 is typically structured and any specialties?
Sure. That's the most common structure. 50% by the bank or non-bank first mortgage lender, 40% by the SBA and CDC, which is what we do at Business Finance Capital, and then a low 10% down payment from the business owner / buyer. But there's a few situations where that's going to deviate, and the two most common are for a special purpose property purchase or when the buyer hasn't owned the business for 2 years or more. So your common special purpose property would be like a car wash, a gas station. And under that scenario, the structure would be 50, 35, 15. Same with not owning the business for 2 years or more. And then another scenario is where the bank or non-bank first mortgage lender are willing to go above 50% for larger projects. For an example, you could buy a building for about $21 million if the first mortgage lender is willing to go to 65% LTV. And with our $5 or $5.5 million second, you could buy a building for about $21 million with just 10% down under that scenario. So there's a few examples of how that typical 50, 40, 10 structure will deviate.
Makes sense.
Yeah.
Makes sense. Thank you for explaining that.
Sure.
Who's the ideal borrower for a 504 loan?
Everybody. And I'll tell you why. During my career, I have financed pre-revenue, pure startups, and all the way to 50-year-old cash cow businesses and everything in between. So there's very few reasons why someone should not apply for an SBA loan. Obviously, there's other eligibility criteria that has to be met, but a new business owner should not be afraid to apply because the program could accommodate them. It's a very liberal program. And a company that's mature, 40, 50-year-old operation, they might think that they're too old or making too much money or what have you. So I would say everybody. And then, of course, we do our profiling. We ask some questions. Obviously, those more established businesses, there's limitations to how much net income they could have and stuff like that. So they may or may not qualify. But I would say most people should apply for an SBA loan if they are in the need of commercial real estate financing. It's a very accommodating program. And like I said earlier, from pre-revenue startups all the way to a 50-year-old cash cow and everything in between, let's talk.
Got it. Do you have maybe one or two examples?
I do. Last year, we financed a pre-revenue pure startup restaurant operation. This was in Santa Barbara, California. Experienced restaurateurs, but currently did not own an operating restaurant. So this was a new venture for them. And we were able to roll in the required TIs for the building and FF&E. So by rolling all that into one 25-year financing structure, that made the payments very affordable while they're ramping up their sales and profits to afford all these debts and expenses that they have on a startup operation. Another one that closed this summer was for someone that worked at a car wash in the past, never owned one, has an established, successful plastics business. And this gentleman bought a dormant car wash building in Lancaster, and we were able to finance TIs, FF&E, and the overall real estate purchase into one financing structure. And these startups are great because they're going to create jobs, and it's another way to add value to the small business community.
What was the structure on that car wash?
That one was 50-30-20. That was a 20% down payment for two reasons. One, special purpose property, obviously.
Right.
And two, he didn't own the business for 2 years or more. So that was 50% bank, 30% SBA CDC, 20% borrower injection.
Wow, that is amazing.
Yes.
Let's talk about, helping people become owners.
Correct. And
Right.
it's great to be in a position to offer that type of financial
Absolutely.
assistance because there's very few programs, if any, that will accommodate that type
Very
of
minimal. I don't think there's any other programs besides the SBA 504.
Correct.
From what I've seen.
Yeah.
From initial to funding, what is a realistic time frame for an SBA 504?
For decades, I always start off with a 60-day escrow period where the first 45 days is allowed for the financing contingency. And within the financing contingency, that includes appraisal approval, environmental approval, and loan credit approval by the bank first mortgage lender or non-bank first mortgage lender and the SBA. So that's enough time to get those 6 approvals done, typically. Sometimes a client needs more time for this or that. If there's construction involved and it takes them a while to get the bid and the architect drawings that's needed for underwriting and the appraisal process, that could cause a delay. Or going back to my startup examples, there's a lot of extra due diligence that's required in a startup. So those transactions maybe need some extra time, but not much. Maybe instead of 60 days, maybe we're at 75 days.
Up to 90.
Yeah, maximum 90 typically, yeah.
How important is it to having the right appraisal, environmental, and everything done, on time?
It's important for many reasons. We typically order those very early in the process. So as soon as we have pre-approved of the request and there's an open escrow, we typically go straight to third-party reports. Our pre-approvals are very strong because we're very experienced with how the SBA underwrites. So we're comfortable accepting the client's funds before approval, as there's typically not enough time to wait for the approval and then get the reports going anyways. And then if for whatever reason more time is needed, sellers are really looking for how much skin has the client put into the game so far. If the client has been in escrow for weeks and they haven't ordered reports, it doesn't show well to the seller of how motivated of a buyer they are. So when more time is needed, the more due diligence that the client can document that they've performed so far, the better chances of getting that extension from the selling side.
Got it. And who should order those reports, the lender or the CDC?
Some banks require themselves to order the reports. Most don't. And most banks would like the CDC to order because we can do it faster. Some banks require the approval. Some don't. We never require the approval to order the reports. And it's just an easier, faster process for us to get it done right away. And that typically works out. And then some banks have limitations on the vendors. So they have approved vendor lists. And if I'm working with a bank that I'm not familiar with what vendors they're comfortable with, of course, I will verify with them.
Prior to ordering.
Yeah, because our back shop will let me know what vendors provided the acceptable bids. And then I'll check with that first mortgage lender to make sure those vendors are acceptable. So we don't have any issues with an appraisal vendor not being acceptable by the first mortgage lender. Correct. So we have to strategize along those lines to ensure a smooth and successful transaction.
There's no delay on the back end.
Correct. Correct.
You've been doing this for many years. What keeps you passionate about SBA lending?
I love helping small business owners grow and succeed financially. 53% of net job creation per the U.S. Bureau of Labor and Statistics comes from the small business community within the United States of America.
Wow.
So the program allows for business growth via buying larger buildings. Hence, the client can now hire more people. That helps the business succeed. That helps the local economy. So it's great to be a part of that puzzle. And working with great internal and external partners is enjoyable. I learn a lot. So the overall collaboration between the team members that I work with, the external partners like yourself, the small business owner, all coming together for a common cause is just what I wake up to do every day. And
that's amazing.
Continues to be very enjoyable.
That's great. If there's one deal that you've done that you won't ever forget, which one would that be?
That was a deal that was referred by you, and I think you know which one I'm going to mention.
Correct.
A law firm bought a building through the 504 program with different lenders, and then you and I were lucky enough to get involved into this very unique and value-added transaction.
Right.
They needed parking for their employees. They needed more parking. They didn't want to pay the rent. I think it was $20,000, $30,000 a month they were paying
right.
for parking space for their customers and employees.
Right.
A paved, lighted, fenced lot came on the market shortly after they acquired their building in downtown Los Angeles. I think it was a $10 or $11 million purchase.
Okay.
And because of the building purchase, they had maxed out on their SBA 504 loan amount eligibility. But there's a nuance within the program that allows for additional borrowing power under the energy savings program. So if you can reduce energy consumption by 10 or 15%, depending on the scenario, you're eligible for a fresh round of 504 second mortgage funding. And this one was a challenge because it's not a building where you typically add solar panels. But in speaking to partners and vendors, the SBA allowed for solar panels to go on top of the light poles, and that was the energy savings that we needed.
3 of them.
Yes.
Yeah.
So it was just a great collaboration between you, us, the environmental vendor that also did the energy analysis report, and it all came together. And now the client has their parking
right next door
to the office building, and they own both assets. And it was just a great win for the small business owner.
So viewers out there, you can buy a parking lot for your business via SBA 504 if you're going to use it for parking for your, vendors, employees, and so forth. It is a possibility versus going natural, conventional route.
Correct. And the interesting thing is that the government approves, whether it's paved or unpaved or fenced or unfenced, land loans through the 504 program are at 90% leverage.
As long as they qualify via their tax returns.
Correct.
With the add-backs.
But it's an unheard of stance because most lenders, non-SBA, are max 50% on land, as they should be.
If they go that high.
If they go that high, it's a higher risk transaction.
Right.
But we're able to come in with 90% land loans, which adds a lot of value.
8-figure.
In this situation, a contractor yard or parking or what have you. So It's a great value add of the program.
No, that was great.
Yeah.
Lee, thank you obviously for your time. One last, aspect I really want to speak about is SBA 504 for equipment financing. Please, if you can give us a little bit rundown of how it works and, why it's possible.
Sure. So again, many people don't know that the SBA 504 program has a standalone equipment finance program. And depending on the remaining economic life of those assets being purchased or asset being purchased, we could actually fund a 25-year equipment loan for equipment. So if someone's buying a $3 million MRI machine or several machines, multi-million-dollar purchases, most conventional lenders are only going to go 5, 7, maybe 10 years on those assets. And if they're buying a bigger building where their mortgage payment is going to be higher than their prior rent expense, and now they have the need to buy all this heavy fixed asset equipment to fill the additional space in the bigger building that they're buying, that longer amortization on the equipment really helps with the debt service and the comfort level of the small business owner having affordable payments. So we just did a $6 or $7 million commercial laundry equipment loan.
Wow.
Where that business was buying several pieces of commercial laundry equipment, about a $6 or $7 million purchase. And he was very thankful that we could do that 25-year amortization.
Helped on the payments.
Kept the payments very affordable while he's going through that growth and expansion mode.
Wow.
So that's out there as well.
Great.
Another huge value out of the program.
Correct. Lee, thank you for coming on the show again. I appreciate your time. What is the best way for viewers to get in touch with you?
Phone and email, 818-438-0828, lee@bfcfunding.com.
Again, thank you for your time and look forward to speaking with you again.
My pleasure. Thanks for having me, Kamyar. Thank you.
Thank you for watching. If you enjoyed this episode, please give us a thumbs up, subscribe, share any questions or comments in the comments below, and follow us on social media. I look forward to seeing you next time.